Welcome to Bondbazaar. In this explainer video, we will introduce you to the world of bonds and how they can bring balance to your investment portfolio and life. Let's dive right in. When it comes to investing your wealth, there are various options available such as equity, fixed income, gold and silver, and real estate. While gold, silver, and real estate are tangible investments, equity and fixed income are intangible investments. In this video, we will focus on the intangible investments. Let's start with equity investments. You can invest directly in equity or through mutual funds that use equity as an underlying instrument. Equity investments are favored by many due to the promise of higher expected returns and ease of investment, like buying and selling at the click of a button and automatic payment settlement. However, it's important to understand that due to volatility of equity returns, expertise and luck both are essential to time, entry and exit in equity market for higher returns. Additionally, managing investments like equity mutual funds can come with significant professional charges such as annual maintenance charges and distribution costs that eat into your returns. On the other hand, we have fixed income instruments such as bank fixed deposits, corporate fixed deposits, government saving schemes, debt mutual funds, and bonds. Bank fixed deposits and government schemes have been trusted by investors for years, providing fixed returns over a fixed tenure. However, they lack upside potential due to fixed returns and cannot be traded like equities as they are locked in for the tenure. Debt mutual funds offer flexibility in terms of easy exit and are generally considered safe as they consist of secured bonds as underlying assets. But their returns can be uncertain depending on the market conditions. Also, it involves presence of high intermediary costs such as annual maintenance charges and distribution costs that can be high as 15 to 25% of your returns. For those investors who are looking for medium to long-term investment goals, say 6-month and above, investment in debt mutual fund is not efficient. Mutual funds keep cash balances and liquid investment, where returns are very low to take care of redemptions as investors can withdraw money anytime. Because of this, returns in mutual funds are generally lower. Now, let's talk about bonds. Bonds are similar to fixed deposits as they offer a fixed return over a fixed period. However, returns in bonds are 3 to 5% higher than fixed deposits. Bonds provide additional benefits like tradability and penalty-free exit, just like equities. Which is why bonds have the best features of fixed deposits and equities, giving balance to your investments. There are mainly two types of bonds based on the issuer. When you give a loan to the government, it is called a government bond. And when you give a loan to a corporate, it is called a corporate bond. Government bond can be used by central or state governments and are sovereign, which means to default risk. The funds raised through these bonds are used for the nation's development. Corporate or companies raise money through the bond market to fund their business activities. Corporate bonds are rated for their safety by SEBI accredited rating agencies with AAA bonds, considered the highest standard in this category. Bonds are listed on NSE and BSE, and they can be sold or transferred before maturity, offering 3 to 5% more interest than fixed deposits. The minimum investment amount for government bonds is Rs 100, while for corporate bonds it is Rs 1000. Now you might wonder, who can invest in bonds? The answer is everybody. However, the important question is, who is currently investing in bonds? Currently, major investors in bonds are banks and debt mutual funds. They collect your savings and reinvest a portion of them in bonds. However, you can also invest directly in bonds and secure even higher returns for your investment. In March 2022, bank deposits totaled a whopping 170 lakh crore, which is nearly two-thirds of the GDP and the equity market, out of which approximately 60 lakh crore are in savings accounts giving less than 3% returns. Approximately 17 lakh crores are in current accounts giving 0% returns, and approximately 90 lakh crore in FDs giving 4 to 7% returns. That means 75 to 80 lakh crore is lying idle in current and savings accounts on which banks enjoy almost 0% cost at the expense of retail customers. Just imagine the wealth creation potential when this money is invested in bonds, where you can earn 8 to 12% returns. Coincidentally, the size of the bond market is also approximately 178 lakh crore, out of which corporate bond market is approximately 40 lakh crores in size, and the government bond market is approximately 138 lakh crore. The bond market is predicted to double in size almost every 4 years. Despite these number and hard truths, retail participation in the bond market is negligible. With over 60 crore PAN card holders in India, the potential market for bond investments for retail consumer is very big. Let's take a closer look at a bond. There are a few things to note. The face value represents your principal amount. The coupon rate is the interest payable on the face value, and the interest payment frequency determines how often you receive interest payments. The maturity date is when the issuer makes the payment of the face value or principal amount to the bond investor. You will find the same terms used when describing the returns for your fixed deposit investments. Bonds bring together the best features of various investment options, creating a perfect balance. They offer ease of trading like the equity market without its drawbacks such as risk of capital loss, market volatility, and requirement of expertise and luck. They also provide secure and fixed returns like fixed deposits without their disadvantages like lock-in tenure. You can sell bonds anytime with interest earned for your hold period. Despite so many features that bonds offer, why is the retail investor missing from the bond market? This has been due to barriers such as low awareness, accessibility, lack of ease, and liquidity. Investors lack awareness about returns on existing investments versus alternate investment options like bonds. When it comes to buying and selling bonds, it often requires the involvement of a broker who deals in bonds. The minimum investment amount was as high as rupees 10 lakhs, because of which it is not accessible to retail's investor. It was not easy to invest in bonds as the processes like account opening, buying or selling were manual and not very convenient for retail investors. Retail investors have always had the perception that bonds are illiquid, not knowing that they can be sold before maturity. But with Bondbazaar's innovation and expertise, we have removed the barriers to retail bond investment. Through our partner network, Bondbazaar is educating our customers and creating awareness about the bond market. On Bondbazaar platform, you can start your investment journey in bonds at just rupees 100. Minimum investment in government bonds is rupees 100 and corporate bonds is rupees 1000. You can choose from over 4,000 government and 14,000 corporate bonds based on your investment goals. Bondbazaar has automated the account opening process and made buying or selling of bonds seamless. On Bondbazaar, investors can buy and sell any bond just like equities. As a platform registered with BSE and NSE and under the regulatory authority of SEBI, Bondbazaar brings you the bond investment experience at zero cost of operations. With a wide range of bonds to choose from and the right knowledge to help you make informed decisions, Bondbazaar ensures that your hard-earned money works hard for you. Bonds not only balance your investment portfolio but also provide peace of mind with their predictable returns. They shield you from the stress of unruly markets and unfavorable timing. Bondbazaar brings you the best of bonds, empowering you to make smart investment choices. Visit bondbazaar.com today and start your bond investment journey with as low as ₹100. Invest wisely, secure your future, and enjoy the benefits of a balanced portfolio. Bondbazaar, your gateway to a brighter financial future. This video has been made for educational purpose. Investment in securities market are subject to market risk. Read all the related documents carefully before investing.